We have got some breaking news to bring you out of Wall Street this morning. You hear it there. U.S. markets just opening after sweeping U.S. tariffs on dozens of countries came into effect overnight, including a levy of 104% on China. And it looks like the sell-off in U.S. stocks is continuing. Also just breaking now, the EU has approved moments ago what they are calling countermeasures, retaliatory tariffs. NBC News business and data correspondent Brian Cheung joins us now. Brian, so a lot to unpack as the markets open this morning. These U.S. tariffs now officially in effect. That happened overnight. We've got China retaliating. Now this news out of the EU. Tell us what you're watching and how it's playing out in the market.
Yeah, we're watching the Dow Jones right now. You can see down over 250 points. That's about 0.7%, which means that if you look at the last 5-day period, the Dow Jones is down 12%. If we zoom out even farther than that, over the last month, it is down 13%. So the stock market slide is continuing as we're getting this flurry of headlines, Savannah, just over the last few hours of some countermeasures that were taken by a number of countries, starting off with a few hours ago when China announced that it was going to ratchet up its tariffs on United States goods going into China to 84% to basically be commensurate and in line with the tariffs that the United States put into effect on China, which is effectively 104% as of today. In the last few minutes, we just got notice from the European Union saying that they finalized their countermeasures, is how they're describing it, to the United States tariffs, which again also took effect today. It looks like it would be on a roughly 21 billion euros of goods. If it's the same proposal as we saw when the president first floated these tariffs, it would cover a wide range of goods, including American whiskey, motorcycles, those types of products. So this is very much a fast-moving picture where you have a number of countries now that these tariffs, these additional tariffs are in effect. These countries are now taking counteraction. I think that that's going to weigh on markets through the rest of the week.
Let's focus on the tit for tat going on between the U.S. and China. I mean, 104%. Can this just keep going higher and higher? What does this ultimately look like?
Yeah, in theory. And, you know, we have to point out that just a few days ago, going into the weekend, we thought that the tariffs on China were going to be an effective rate of 54%. And then what happened after that? China said that it intended on ratcheting up its tariff rates on the United States goods to 34%. Then you had President Trump via Truth Social just a few days ago saying that he would add 50%. And then what did China do? They added and increased their tariffs as well. So even just over the course of the last few days, we have seen this escalation of the tariff conversation. And I do want to point out that, yeah, we've been talking all week about the types of things that could get pricier as a result of this tit for tat kind of bidding up in the tariff rates. Things like electronics, things like vehicles, which you see on the screen ahead of you. These are things that could get a lot more expensive with these tariffs.
There's a lot of ways that Americans are feeling this, right? It's their money in the stock market. It's their retirements in the stock market. It's also the price of goods as these tariffs really come into effect. You've been doing a lot of great reporting on that. Remind us, what is going to hurt? What's going to cost more to buy and when?
Yeah, estimates that clothing and shoes could get 17 to 18% more expensive, according to the Yale Budget Lab. Vehicles could get more expensive to the degree of $8,000 for even domestically produced vehicles, $12,000 for foreign-produced vehicles. Electronics, $200 to $300 per unit for things like laptops, for things like tablets, for things like gaming consoles, if you can even get those products. We heard just about the Nintendo Switch 2 earlier, right? This is their brand new console. They said that they're not going to take pre-orders for the time being in the United States because of these concerns over the tariffs. You have some other companies like Jaguar Land Rover. I know those are luxury goods, but they said they won't even export to the United States for the time being. This is just part of the beginning of this process here. And when it comes to those price increases, they may not happen immediately today, but as things are getting offloaded at ports across the country today, they're getting slapped with that extra bill by Customs and Border Protection, which means that in theory, these price increases could be happening very, very soon.
For people at home who are like, why is this happening? What is going on? What is this going to accomplish? What is the answer to that? Maybe at least from the president's perspective, but then also a reality check.
Yeah, well, again, the reason for why the White House is going about this is to reshore American manufacturing. They are trying to reverse some of the losses that happened in what they call the China shock of the 2000s, where a number of communities in this country lost manufacturing jobs to China because they did it with cheap labor. And I think that the idea here is that President Trump wants to ratchet up these tariffs, make it more expensive for other countries to sell what would otherwise be cheaper relative goods in the United States, and convince companies to build things here domestically in the United States. The problem is that it's going to cost billions of dollars to do. It's going to take years to build those factories. And I think another thing that not a lot of people are talking about is staffing up those factories. Is it the case that if you build, a factory that can make textiles, that those jobs would be well paying enough to convince people across the street who work, at a coffee shop to go and take on those jobs? It's not clear that we have the labor supply, especially as the administration is also clamping down on immigration to fill those jobs. So, but the idea here is, again, to bring manufacturing to the United States.
Any off-ramp here? If so, what is it?
Well, the off-ramp would be negotiation. And I think that as we hear that there are all of these countries, allegedly, according to the United States, I think 70 was the last count, that are going to the White House and saying, hey, can we have a conversation about lowering our tariff rates? That could be step one to potentially lowering these rates. But it sounds like these are bilateral conversations. So absent some sort of large sweeping trade deal, which it doesn't sound like the Trump administration is willing to do, they would have to negotiate with each country how other countries can lower their tariff barriers. But it's not just lowering the tariff rate on U.S. goods to zero. In fact, Peter Navarro, the top trade advisor to President Trump, said that Vietnam offered a 0% tariff. That's not good enough. He wants intellectual property protections and also some sort of explicit agreement that goods won't go through from China to try to avoid a higher tariff to China. So how do you do that with every Southeast Asian country? This is going to be a very politically complicated thing to pull off. It does kind of underscore the talking point from some administration officials that these tariffs might be here for a little while.
It's also a little confusing because the stated goal, as you point out smartly, is this: bring American manufacturing home, make these things here, reward those companies for doing so. And then also what you just mentioned about Peter Navarro and how he is approaching these negotiation conversations. But then you did hear the president touting last night in an appearance 70 countries are calling to negotiate. So in some ways, it's like, so is that a goal?
Well, and I think that's the problem. And that's the reason why the stock market is selling off. Because if you are the CEO of a company, be it Delta Airlines or you own a toy store down on Main Street in your local town, you don't know if the tariffs are going to be here to stay because you keep getting these mixed messages. Wait, is this for negotiating? In which case, then I'm not going to change anything that I'm doing right now because the administration just wants to extract something. Or this is a rewiring of the U.S. economy for decades, in which case you might try to make those changes. So that's the reason why you have some of these big companies just this morning, Savannah, saying they're not even going to issue guidance for how much they're going to make in the next few quarters. That's a very big thing on Wall Street, is guiding on, like, okay, how much is your net income going to look like over the next few quarters? Delta Airlines and Walmart, very recognizable consumer names. They're saying they're scrapping their forecast because they just don't know what the future is going to look like with all this rhetoric.
All right, Brian Cheung, you're going to be with us throughout the morning. Thank you so much. And we're going to keep an eye on the markets and your money, of course.
Thanks for watching. Stay updated about breaking news and top stories on the NBC News app or follow us on social media.